All right, Michael Hall is with Nickel Digital, and they are managers of cryptocurrency investments in London. Hi, Michael, and thanks for joining us today to talk about what has been a momentous couple of weeks in cryptocurrency, right?
Good morning, Dana. Thank you. Thank you for having me.
So, look, I don't think anybody would fault me for describing this as an earthquake in crypto markets. What started it all?
This was really started by, we have to go back in time 3 months to the lunar terror crisis, which precipitated a series of bankruptcies, first of 3 Arrows Capital, then of some lenders, and it left bad assets on people's books. And finally, the chickens came home to roost when earlier this week, a very large exchange called FTX went bankrupt. They declared Chapter 11 bankruptcy, and they had over $10 billion of investors' assets on the exchange. It's the Lehman moment of crypto. The good news is no taxpayer money will be used in this bailout. There's no Fed. The Fed sent $85 billion to AIG Financial Products in 2008. That's not going to happen here. It's going to get resolved and worked out by adults without any regulators involved.
But the bad news is people lost money. So regulators or no regulators, people lost a lot of money. I mean, it's several $1 billion probably for investors.
Yes, and it's not just institutional investors such as ourselves. I mean, we got our hair mussed. We lost 4% in our arbitrage fund, 9% in a multi-strategy fund. Another fund, we had insurance, so let's see if that pays out. So we weren't hit badly, but we were hit. We haven't been caught by anything else, but this caught us out because it's such an unusual story. In fact, as context, there will be books written about this, and we know there is because Michael Lewis, the author of Liar's Poker, was shadowing the main character in this story for the last 6 months with the idea of writing a book. I now imagine he's very hurriedly re-editing the book.
He's got a profitable one, whereas the guy he was following is broke. So for people that don't know cryptocurrency at all or digital currencies, what is an FTX trading platform? That's where you went to trade your digital currencies?
Yes, it's a digital exchange. It's an offshore digital exchange. And it was offshore because it traded derivatives, and derivatives exchanges haven't yet been approved by the regulators, not in the US, not in Europe. And so these exchanges that members of the public want to trade on, and institutions like us want to trade on, they are forced to establish themselves offshore. FTX was headquartered in Antigua, and I think they were physically present in the Bahamas. So that's where they were. And there are other exchanges like them in offshore places as well, like Seychelles, Singapore, Gibraltar, Hong Kong. They've all been forced offshore by the lack of regulation, the lack of clarity of rules around derivative exchanges.
That seems opposite to me. You'd think that if there was a lot of regulation onshore, that would be the reason they went offshore. I don't understand. Why do they need to be offshore?
Because they're just not approved to do what they do. It's a very interesting play. If you allow me for a second to go through the cast of characters, you have the main villain, Sam Bankman-Fried. He, MIT physics grad, worked at Jane Street, the storied proprietary trading firm, then left to set up Alameda Capital, a proprietary trading firm that he ran, and then set up FTX. And these two companies, Alameda Capital and FTX, were together entwined, and a lot of the money that was lost from FTX was lost by Alameda Capital. It's notable that Sam Bankman-Fried, his parents are two Stanford law professors. They are big Democratic fundraisers, and Sam himself gave $40 million to the Democrats, which may explain some of his close relationship with US regulators. He's gone to Capitol Hill. He's testified in front of Congress. He's met with Gary Gensler, the head of the SEC, and the head of the CFTC as well. In fact, his girlfriend, who runs Alameda Prop, her father is the head of the economics department at MIT, who gave Gary Gensler his lecturing job there. So it's all very entwined. You couldn't make it up. Other characters include the investors, not just us, but there were people who invested in the equity of his exchange. Now, we may get some recovery on the money that we put on the exchange, but those investors in equity, they've been wiped out. Now, these are people like Temasek, the the multi-billion-dollar fund who spent 9 months doing due diligence on them and invested $200 million finally in them. In that fundraising round, which is a 32 billion fundraising round, included SoftBank. We see their name again, BlackRock, Ontario Teachers Pension Fund, and people like Paul Tudor Jones and Izzy Englander, the founder of the $50 billion Millennium Hedge Fund. They were also personally invested. So you'd think that people like that would do their due diligence on them, but clearly that wasn't. We're finding out now that it wasn't done. So, and then we have the promoters. I mean, these are people who were on the Super Bowl. So do you remember Larry David's Super Bowl ad for FTX?
Yes, there were a lot of celebrities that came forward with these ads saying that they were going to invest.
Tom Brady, Gisele Bündchen. Tom Brady's the American David Beckham, except he's
absolutely
he's much more talented. But essentially, all these players were involved in this story that involved in $10 billion being stolen by FTX and moved to Alameda, where Alameda lost this money. And that money should never have been moved.
So it's really important what you're talking about, right? Because I'm an old crime reporter, and generally there is always a wall, if I can call it that, between one company and another. And if you have investor funds, you just can't move those over to another company without asking the investor to cover the debt. But I mean, that is essentially what happened, right? I mean, FTX moved money over to this other company.
Yes, apparently there was a backdoor written into the accounting system they used so that Sam Bankman-Fried could transfer money from the exchange into the accounts of Alameda Prop Trading Company. It's straight out criminal fraud.
Well, there's everybody's involved now. The SEC, the Justice Department, lots of people are investigating. But I didn't realize, I mean, are you victims yourselves in terms of some of your investor money was held there? You were trading
not only, so we had money of our own invested in our own funds. So we invest in our own funds. We've taken a 10% hit on the investment that we had in the multi-strategy fund. The investors in our arbitrage fund have taken a 4% hit on their investment. Now, for us, we think this is recoverable. We can make this money back. And one thing, if there is any good news in this, it's that there are far fewer people playing in this space now. This capital that's being taken out means that there'll be more opportunities and we'll be able to get more attractive returns for our investors. But that still doesn't make everybody whole. It's just the people who invest in funds now, where there are far fewer people playing in this space. So the opportunities will be bigger and they'll persist for longer. So that's the only really good news.
And then I know something about your company. I mean, you guys come from banking backgrounds. You're not, long-haired t-shirt kids who are messing around with cryptocurrency. You all understand institutional investment, safeguards for holding people's assets. So I know you can't like any of this, but at the same time, Michael, where do you think now, when you talk about regulation and you talk about safeguards, what do you think now has to happen?
Well, I think the regulators have to get involved. When you have Super Bowl ads promoting an exchange, which then goes bust, losing $10 billion, there were US retail clients involved, even though they weren't supposed to be involved. I'm sure they were. Why does somebody advertise on the Super Bowl if they're not looking to attract US retail? So the US regulators have essentially dropped the ball on this one. And they should have, rather than say they just prohibit these exchanges, they need to say we need to work with them and get them onshore and then regulate them. But the idea
why haven't they done that? I mean, they know that all the money's been attracted to cryptocurrency, digital currency. Why? They know the high profile part of this. They have been lobbied, the regulators have been lobbied to legalize funds and to accept trading of funds on the main exchanges. They've tried to avoid all of that. Why? What has brought us to this moment with the regulator?
Well, you really have to ask them that question. We can surmise and say that it's a lack of knowledge, a lack of education at the regulator. But we can only surmise. You really have to ask the regulator why. And the interesting thing is, of all the people, of all the exchanges who were engaging most with the regulator, Sam Bankman-Fried was the leader. He was the one going to Congress. He sat down with Gary Gensler. He sat down with the CFTC commissioners who were tweeting out pictures of themselves with him. And he comes across as a sociopath, because he was engaging with these people while he was committing this enormous fraud.
I mean, I want to say the answer is that the regulators just haven't liked cryptocurrencies, and for that reason,
could be that too.
They've steered away from them, and now they've got billions in losses from investors who are going to say, step up and start regulating.
Exactly. But how do they do that? How does someone in the US regulate an exchange that's based in the Seychelles? People in America have access to VPNs. The way to do it is to bring it onshore.
And how would you bring it onshore? If you can just tell me in a simple way, you would make it attractive for them to be onshore, or you would mandate if you're taking money from America or you're taking money from Europe, you're going to have a company licensed onshore.
Okay, so there are two issues the American regulators have with cryptocurrency exchanges, these derivative exchanges. One is CFDs. So CFDs, contracts for difference. They're very common in Europe and especially in London, but the US hasn't approved any of those. So the US just doesn't like CFDs. It's a type of contract. What about futures contracts and derivatives? They have those. Those exist on the CME in Chicago, and they could approve those and have those, but they haven't. They haven't given regulatory license. They've been aggressively going after people like Coinbase and Kraken for minor infractions, while letting $10 billion float off to the Caribbean. And it's just wrong. But they need to wake up and smell the coffee.
Is some of this related to what's going on and I don't profess to understand fully what's going on in the tech industry right now, but Twitter, Meta, Amazon, huge layoffs. I mean, I think 35,000 people have been laid off in the last week or two. It's a huge tech dip. And dip may be an understatement.
Yeah, I don't think it's connected to that. This is just fraud. This is somebody who got in over their head, made some bad bets, tried to cover it up with investor money, and then blew up. And this is on a scale of Madoff. I mean, the net Madoff loss at the end was around 9 billion. The net between the money he actually took out and burnt and destroyed. There were a lot of recoveries from that Madoff money. I don't think we'll have as high recoveries here, but one can hope that the administrator does a good job and recovers as much money for the investors as possible. But I think that's unlikely because it was just burnt by Alameda in the markets. So that's unfortunately the situation.
Do you think that the money is going to come back to the crypto market after? I mean, people have been bruised.
Yeah, so we've seen about half of the volume that was on FTX migrate over to Binance, another unregulated offshore exchange. Now, this exchange, Binance, is run by a person called CZ. He's the main kind of shareholder and owner. But we can't be presuming that just because someone appears to be a benevolent leader that they're not going to do just what Sam Bankman-Fried has. It's not enough to have regulation after the fact and put people in jail. Investors need to be protected before then.
Michael Hall with Nickel Digital. Great to talk to you, Michael. Thanks so much.
Dana, thank you. It's been a pleasure.